Time for another stock review. Yes, if you're a member, you can ask me to do a review like this. Greggs PLC. We're covering it. Ticker symbol GGGSY. We're talking about food and beverage today. Yes, we are making some money today with our investments in the food and beverage space. Can you make money with this today? Well, we're talking Greggs. What is Greggs? Well, in this review, I'm going to break it all down for you. We're talking about this, and let me just show you on the screen. Greggs pasties sandwiches, one of the favorites in the UK. It's a British company. We're loving it, loving it, loving it. We're going to give you all the numbers. We're going to give you all the data. We're going to do look at the chart. Not much to show you there, really. Not that exciting. A back test against the S&P 500. Look at the dividend payout. What's its history? No point having a dividend-paying stock that doesn't pay out regularly. We're also going to show you all of the behind-the-scenes numbers, things like this. We're going to show you the intrinsic valuation. You're going to be able to get my software for free. You're going to be able to download free trials, show you all the balance sheets, who's buying on the inside, who's selling on the inside, so you can make an informed decision whether you wish to buy Greggs or not. If you're one of my members of the channel, we're on a members only week. We're doing all members questions, members suggestions, and everything for the members. As we're coming up to our 4th anniversary, 100,000 subscribers, and the members built this channel. Flippin' heck, they even paid for this amazing, beautiful chair with my logo on it, which they now name me the chairman of YouTube. So in tribute to that, here's our first review. Greggs, we brought it to you last night for a bit of fun, and everyone popped on the video and got excited and thought, hey, why not cover it? So we're covering it on Sunday. There's a link at the end. Sensei will do a full technical chart for you. So you'll have a technical chart and a fundamental chart, right? So what is Greggs? Shall we go into it and work out what Greggs is? Well, we all know it's a pasty shop. It sells sandwiches, but is it a good stock to buy? Well, let's have a look at some of the information right here. If we go over, you may notice at the top ADR. That means it's. I'll give you the full definition. ADR. What are ADRs? American Depository represents shares of non-US based companies. All right. So this is a British company, PLC, publicly traded company. That's what it stands for. Right. Okay, let's go down and have a look. Let me open up the information. We're going to start off nice and simple and get into much more detail as we go down through the review. Greggs is a bakery retailer in the United Kingdom. The firm owns and operates and a supply chain from production through to distribution to point of sale. It operates with a retail company, managed shops, and businesses to business segments. The retail company managed shop segment sells a consistent range of fresh bakery goods, sandwiches, and drinks in its own shops or via delivery. Now, as you know, on this show, we like businesses that are real businesses, and they don't trend. They don't go in and out of fashion. It's like why I like Coca-Cola. It's why I like the S&P 500. This is the sort of company I would buy. It's a top company in the UK, and we're always going to want sandwiches and pasties. I know all about that. I'm from Cornwall, right? So the company was founded by John Gregg in 1930 and is headquartered in Newcastle upon Tyne, the United Kingdom. Listed name is GGGSY, is Greggs PLC. Right. Founded originally 1951. Well, this stock was. The company was originally around in 1930, but this stock here is 1951. The CEO is Roycin Curry. Now, if you'd like Roycin on the show, we've done lots of CEO interviews. They're all members only, where you get to listen directly to the CEO. If you are an investor, simply email them. Email customer relations, tell them you're an investor and you'd like to see them on the show. Get a relationship with them and then put them in touch with me once you've built up that relationship, and we can bring them on the show for you. It's part of a member service that we provide, and it's a members only video too. So you can have that, no problem at all. I'll interview them. Average volume 152. People aren't trading this very much. They're just owning it. Market cap 2.38. Dividend yield 3.29. So you've got a relatively strong growth company with a dividend yield. Ooh, that's right in my wheelhouse. It also is value. We like value. PE ratio 14. We'll look at the forward PE ratio. Is there a forward PE ratio? The forward PE. No, there isn't a forward PE that I can see of, but I do have the PE ratio. I'm going to show you some more analysis in a moment. But 14 times earnings. That's okay. That's okay. We like that. All right. Let's have a look here. Analysts, Morningstar, they say it's strong buy. They're paid to say that. Not paid to say it's a strong buy, but they're paid to do an analysis. I do it for free. So it's good to see it, but I wouldn't just run out and buy it because Morningstar say so. Got to do my own research, all right? Who else buys the stock in the US? Not on in the UK. I mean, maybe on, well, no, this will be US. This is my US account. This is in Robinhood US. So this is not necessarily how people trade it in the UK, right? But Lucid, that's not good. Intel, CrowdStrike, Neo, Ford, Amazon, Walmart. Okay, started off rubbish with Lucid, but Intel, then it moved up to Neo, not so good there. Ford, Amazon, Walmart, Target, PayPal, GM, Pfizer, Disney. Okay, so everything about that, apart from SNDL, perhaps, Coca-Cola, Tilray, and also not good, but a lot of blue chips, solid, good, solid businesses there. So that tells me it's, apart from a couple, most of them were good. Now that's good. That tells me the stock trades well. It's not being pumped and dumped, and it wouldn't be. It's not a sexy stock. This isn't a crypto coin or something, trending. This is a solid business. So far, I'm liking it. I'm liking it so far. Let me now invite you to tap the like button. All our members are watching now. They've already liked and seen it. It's a private video right now being made for my members. But now you're the general public. Hello, welcome. My name's Martyn. How do you do? Tap the like button if you want to share this out, and consider subscribing to our channel if you want to support our show and watch it grow and be part of the family as we approach 100,000 subscribers in less than 3 months. Very exciting. Silver plaque going up there. Can't wait. Right, so let's have a look at this now and go over to some analysis. Starting simple, and we'll get into it as more as we go. Seeking alpha analysts, I don't put too much weight on it. Very much it's their own stock. They buy it themselves and whatever. But they're saying a strong buy. It's good to see. Again, we saw from Morningstar. Good to see, but I'd still do my own analysis. But very nice. Wall Street, quant, not covering it. Not paying attention to it. So it's a UK stock, right? Even though it does trade on the New York Stock Exchange in this format. This is GGGSY. There are other formats of it in the UK. The PE ratio, 15.61, slightly higher here, slightly different calculation. Short interest, none. Great. You see what I mean? No one buying this, selling this off, putting this down, doing options against it. So far, I'm liking everything I'm seeing about this company so far. Right? I've shown you the website. I'm not going to go on that too much. There's nothing in there about investment news. It's just telling you about the company. I can just tell you from experience that this is a favorite in the UK. It's all over the place, including at airports and so on. In the UK, don't expect to see it on your local in Los Angeles or anywhere, but you do see it in the UK. You're buying a solid staple business in the UK. Right, let me have a look at a back test. Compare it to the S&P. You got choices when you invest. You don't just go out and buy anything willy-nilly. You compare it to the competition. You compare it to something else. See what everybody else, how it compares to the benchmark. If you don't do that, you're just guessing and you've got no idea and just silly, really. So if you put $10,000 in the S&P in 2022, That's far back as this stock goes. The company's been around a lot longer, but this stock in the US has traded a lot less. It's only the last couple of years. And you can see it dropped off from its IPO. That's the blue line. The green line is the S&P 500. So it's underperformed the S&P. Okay, so far. So if you put $10,000 in Greg's, you've now got 6-7. So it wasn't good to buy it at the beginning, but it's certainly potentially, so far what I'm seeing, a good buy now. You could buy it now. Now, if you compare it to the S&P, yes, you'd have had 13 grand. You'd be up by now. So you've lost money compared to the S&P. Okay, well, you know my thoughts on that. But that gives you an idea of how it's performed. But you can see it's now growing. It's recently sold off from September 2024. That might have a lot to do with the uncertainty of everything that's going on in Europe and exchange rates right now and uncertainty of tariffs and deals and trade deals and so on and so forth. But you might want to consider this could be an opportunity to buy now. Looks like if it goes back to this level here, it rose since then, it could well be a good time to buy. Anyway, Sensei will provide you the technical chart on Sunday. I'll give you a link to that at the end if you want to do that. Now, this stock also, remember, it's a very high-paying dividend stock. Now, this is important. Now, you might say, well, was dividends included in this? Yes. Dividends were included in this, and they were included in the green line, the S&P 500. So yes, this includes investing your dividends automatically. I always invest dividends manually. On my S&P, the same. I wait for the dips to buy back or whatever I'm going to do. Because I use margin, it doesn't really matter so much. It just goes in the cash to reduce my margin. But this is automatic in reinvesting. It'd be better when you get your dividends to wait for a dip and then buy here, and then buy here, and then buy here. So you could improve on this and bring it closer to the S&P by doing manual dividends. The reason for automatic dividends are for people who just don't monitor their account. They're not passive investors. Sorry, they're not active investors. They're passive investors. They're not paying attention. So you want to pay attention, and you're going to get a better deal, right? And it's kind of obvious. Anyway, let's come back to the chart as we go the basic line here, and then we're going to go into the numbers. All right. So if you like this so far, please tap the like button and consider subscribing to the channel. Now we're going to find out whether you can make money on this stock, whether you can turn the money printer on. Can you make money on this stock? Well, it all depends on the valuation. We often talk about time to buy a stock. When you go through the numbers and you look at it, you've got to decide whether it's the right time to buy or not, because you don't time the market too much. We don't focus on that too much, but if you're going to buy a great business, you have to buy a great business under value, not overvalue, right? Otherwise, you're just in a waiting pattern. You're in a holding pattern, waiting for something to do better. All right. Well, we like to buy under value if we can. So let's go and have a look at this one right now. Well, the intrinsic value, the current price is $7.77. That's the price of the stock. Intrinsic valuation is saying it's worth $14. Another tick in the box. I'm liking it. The analysis from Morningstar and Seeking Alpha Analysts so far stacks up. 45% undervalue. It's not getting attention in the US. People are focusing on tech, crypto, what Trump is going to be behind. No one's noticing a great British company coming up here in the rearview mirror. Worst case scenario, undervalued by 17%. And there are no warnings. This intrinsic valuation is reliable. It's definitely a buy from me at this point. 61% undervalue. Best case scenario. Best case scenario, what would that be? War ending in Europe. The wheat basket is Ukraine. Wheat has a lot to do with sandwiches, a lot to do with pasties. So think about that. Best case scenario, war come to an end in Ukraine. The food basket of Europe. Yep, that's true. Inflation come down. Inflation is coming down. Rates come down. Rates are coming down. Trump take away the tariffs. That's about to happen, potentially. Zelensky signing the deal with America. That's going to happen. We could be in a best case scenario. Even if we're in a worst, we're 17%, which outperforms the S&P. You know what? Greg's is a buy from me. As long as the balance sheet adds up, which it will do. I'm sure it will. Scroll down. Revenue up 6%. Operating income down 3%. Some big investments going on here. Oh, this was, sorry, I beg your pardon. I was looking back here. Down 3%, but now we're expecting it to rise. It's not an S curve. This isn't an explosive Tesla. This is everyone in England already buys pasties and sandwiches. They're going to just carry on doing it. And guarantee you they're going to carry on buying pasties and sandwiches. When I go back to England, I go to a Greggs. Our audience go to Greggs. We asked about it last night on the show. So steady growth. But you got a dividend to remember as well. Net income, sort of back in 21. This was after COVID. Oh yeah, it's COVID. Look at that. Look at COVID. Look how COVID completely crushed the business. Obviously, no one's going to go to the shop and buy a pasty, are they? Anyway, rising again. That's a little bit of an S curve there into 27. I like that. Free cash flow up 32%. They're making some money. I'm loving that. What about this? We've got operating income up 14%. EPS is down 4%. Let's have a look here. 1 billion in assets, cash, 141 million. Nice. I've always said I don't like businesses who are just a big pile of cash. No, there's no valuation to that. We've seen stocks that are just cash. They're just basically wallets, bank accounts. Well, there's no point buying that. You can own that yourself. So it's got 1 billion assets, 141 million in cash. It's got some cash, good, but not just a big cash bucket. It's got other things, assets. It's got the business. I like that. What about liabilities? Has it got any debt? Long-term debt, 270 million. No short-term debt. Long-term debt, 273 million. Quite a bit of debt. About a third. In fact, I can tell you exactly. 42%. There you go. 42%. Quite a bit of debt. Don't like that. That's not good. 42%. It owes, his debt is 270 million, but it has 141. It can wipe out 50% of its debt if it wants to. No, that's not great. It's not great. It's not that bad. It's not amazing. But rates coming down, that will help. And rates are coming down in the UK. Europe's growing faster than the US at the moment, and rates are coming down faster. So that catalyst could be a positive because it's their only bad thing so far. And if rates come down, their business makes more money because they're spending less on interest, right? And that's kind of obvious. So it's not amazing, but not a major problem. Now, this is interesting. Gross margin. Gross margin, 61%. That's okay, but what's important is your net margin. That's your moat. They're making 7%. I think that's pretty good. I'm not an expert in the food beverage space, but I think 7% in the sandwich pasty making business is actually quite good. These are small margins. When you're selling a pasty, it costs you a couple of bucks to make it, and you sell it for $2.20 or $2.50. You've got to sell a lot of pasties, right, to make a lot of money. But that's okay. That's expected. I'm okay with that. I'm okay with that. FCF margin 7.7. At least it's green. ROC. These are all positive numbers. 23%. ROIC 20.8. ROA 13%. And if you want to know what these all mean, the definitions here. I'll give you the access to my software in a minute. You can use it for free trials. All my members get discounts to this. Let me give you the link to this. There is the alpha spread and there's the Seeking Alpha. You should all have this software by now because many of you can have a free version of it, free trials of it. So you should all be doing that anyway, right? And if you want the software, that's the link. For those of you watching later, you'll see the links posted below in the description, and you'll see the links also in the top pinned to the top of the comments as well. So profitability, 66%. Great. You might go, no, you've said it's great when it's 70, 80, 90. Yeah, for a software technology company. Of course, a software company makes bigger profits. It's inevitable. It's the nature of its business. Minimum cost, massive amounts of profit. This company actually have to make something. They have to physically have stores, people working there, the ingredients to make the sandwich. They're not going to have the 90% profits. You can't charge $100 for a pasty, but you can charge $1,000 for a bit of code on a computer. All right. So 66% is fine. They're making money. Right? 69% solvency, not going to go bankrupt. You can invest in it. Strong company. Is it the best balance sheet? No, but is it going to improve? Yeah. Rates come down, it's going to improve. Europe, the war, inflation, all that, going to improve. It's already doing good. So I'm happy with this. I'd buy this. This is a buy from me. Wall Street, 3% downside. If you've got an allocation of $1,000, you put maybe 700 in now, 70%, maybe more. If you get a bit of a drop, you buy the extra 300 and just buy a drop. That's it. One more time. You don't need 20 laddering ins positions. $1,000, you've got an allocation. You put 700 in. You leave 300 on the outside. You buy. If you get a little dip, you buy a bit more. That's it. You're all in at 1,000 with a dip. 63% upside. 136% up. This is great. This is one of the strong stocks I've seen. Now, news media, no one's covering it. I'm covering it now. This will be the very first video in the US probably covering it. This will rank. People will learn about it. I'm pretty sure about that. In fact, I know that. I don't even guess. I don't guess anymore. I've had 4 years of analytics. I know 100% I will be number one in the United States on YouTube for Greggs. 100%. 100%. It will rank. No one will be doing it. I'll go straight to number one. If I do 2 or 3 of these, stock price will go up. Not because I can manipulate. I'm going to say I can pump the stock because I can't. I only own the S&P. I'm not doing it for that reason. Markets are down today. I was just trying to see if we were up today. Been buying more of the S&P today, waiting for Trump's tariff decisions. But at the end of the day, this is a buy from me. It's not financial advice. I'm only in the S&P. I'm not here to pump and dump anything. I'm just telling you my experience, what we're likely to see. We're likely to see this go up when this video comes out and trends after a while, especially if some of you contact the CEO and ask them to come on the show, then that's going to get a lot of attention in the United States. No doubt about it. 100%. Right. So there's my review. What do you think of that? Hope you've tapped the like button by now and consider subscribing. I'm glad you've waited to the end because now you can have some fun. And there's a special video. We had fun last night when we learned about this stock and the reason why we ended up doing a review below in the description. And I'll also give you a link for it now. So click above my head for all the links. If you click above here or look in the more section, you'll find all the links I've been talking about throughout the show, which is the analysis software and the playlist to Greggs and so on and so forth, the extra video I did, everything else. Down below in the description, you'll find all the analysis software, also the playlist for Greggs, and you'll also find the link to the funny video we did last night. And over here, I shall put you the playlist for Greggs. We'll create a playlist. So if we do more, we do earnings, it'll all be up here. Meet the CEO, it'll all be up here. And down here, the video I put out last night, the funny video, which brought this to our attention. So there we go. Greggs, our review for our members. Until next time, as always, take care of yourselves and each other.